I take this chance to welcome you all in our today's webinar. We're going to handle tax planning strategies for businesses and individuals. So I'll start by a word of prayer so that we can begin. So let's pray. Our Lord, our Father, we come before you this morning with thanksgiving in our hearts. We thank you for this chance that you are given unto us as we start this discussion. We pray that you may be together with us, give us a mind of understanding and knowledge that cometh from above. I pray this short below in Jesus' name. Amen. So kindly confirm in the chat box whether I'm audible enough and whether you can see my screen. I've shared the workbook. So kindly confirm whether it's visible and whether I'm audible enough so that we can begin. Thank you, Esther and Hesbon. So I'll start by introducing myself. My name is Mirinditi, a team member at WK Africa. So today we are going to handle tax planning strategies for individuals and corporates. And our content will be having the tax structure in Kenya. So before we go to the tax planning, we have to understand the tax structure. Then we have an overview of the tax planning. And then we check on the tax planning strategies and the emerging issues. So in case you're having any question, you can kindly raise in the chat box and my colleague will be responding to you as we progress. So we start by the tax structure in Kenya. So this is basically to understand the different tax obligations that we have in our businesses and also as an individual. So I believe we all are registered taxpayers. So under this tax structure, these are the taxes that affect us as the taxpayers for companies and for individuals. So number one, we have the pay as you earn. Basically, pay as you earn is a tax on the employee's salary, and it is the responsibility of the employer to have the pay obligation. You deduct the tax, the pay tax when paying your employees their monthly salaries and other benefits, and the tax should be paid to KRA on 9th of the following month. So note, it's the employer who should be having the pay obligation to deduct the salaries from the salaries of the employees and deduct to KRA. Then we have the corporation tax. This is the tax for the companies charged at the rate of 30% at the end of the accounting period. So if your year ends at 31st December 2025, you have 6 months, that's up to June 2026, to ensure that you have engaged your auditor to audit your accounts and also to ensure that you file the tax returns. So basically that's for the corporation tax. You declare your revenue and you deduct the expenses that you have. So the 30% will be subjected to the profit for the year for the business. Then remit that to KRA. Then we have the VAT. So this one applies to the vatable goods and services. So if you're dealing with vatable goods and services, you are expected to register for the VAT obligations once you hit the KRA limit, which is 5 million annually. So if you are in a business dealing with vatable supplies, and at the end of the year, your revenue will hit the 5 million threshold, you're supposed to register for the VAT obligation, which is compulsory. And failure to do that, KRA will come to you and they are going to charge you even penalties for non-compliance. Then we have the withholding tax. So withholding tax, you're supposed to deduct at source for the professional services. We also have consultants, commissions, contractual fees. So once you engage a contractor or even an auditor for any professional fees, you have a training cost. You're supposed to withhold 5% for the professional management and remit that to KRA. So when you're paying the supply of that service, ensure you deduct the withholding tax, which is 5%, and pay to KRA. For the contractual fees, you have engaged a contractor. The tax rate is 3%. You're supposed to deduct that before you pay that supplier and remit to KRA. So every service has a different tax rate for the withholding. You're supposed to comply. So also we have the withholding tax when it comes to the VAT withholding tax. if KRA has appointed you as an agent, as a VAT withholding agent, you're supposed to deduct 2% before you pay the supplier of your supplies, then you remit to KRA. But for that, you should be appointed. Then we have the rental income tax. If you're having rental properties, you're supposed to file the rental income tax. If the properties are residential, you're supposed to file 7.5 on a monthly basis and remit to KRA. But if you have commercial properties, you should be having the VAT obligation. For the commercial properties are vertable. So ensure you have the VAT obligations and you do the monthly VAT on time and remit to KRA. Also to note for the commercial property, at the end of the year, once you do the monthly VAT, at the end of the year, you're supposed to file the corporation tax and declare under the rental category. So I believe those of us who are familiar with KRA filings, when filing, you see that we have different categories of the returns that you should declare. We have for the business, farming, rental, interest, and any other. So in this case, for the rental, that income declared it at the end of the year. Then you deduct all the allowable expenses, and the tax will be charged at 30% on that profit. Then we have excess tax. It affects those people in the manufacturing sector. We also have the capital gain tax. During the sale of properties, you're supposed to pay CGT tax at a rate of 15% to KRA. Then you have the turnover tax, basically for the small business people. If you have not hit the registration limit for the VAT, but you are dealing with those vertable or the business that you're operating, you are between 1 million and 25 million, you're supposed to register for turnover tax, and the rate is at 1.5% of the gross monthly sales. So it's good to know the tax structure. So whichever tax that applies to your business, comply, register for that tax obligation, and remit the taxes to KRA on time. So before we come to planning, basically that's the tax structures that we have. When you talk about the tax planning, we will be referring to the different tax structures that we have covered there. So now we move to the tax planning, the overview. So what do we mean when we talk about tax planning? So basically, it's the process whereby you check your financial activities so that you can minimize your tax liability, but you are doing this legally. You're not evading paying tax. So when you talk about planning taxes, you are checking on what you can do so that you can minimize the tax that you're going to pay while you're still maintaining compliance and you're still making profit for your business. So it's a legal way to minimize your tax liability. So it involves making decisions throughout the year, not just at that time when you're doing the taxes. So you check on your income. What do you need to do when it comes to the income? What are the strategies that you need to implement in your business so that you can reduce the taxes? You also check on the investment and the expenses. So the aim or the objective of the tax planning is to reduce your tax liability. As well, you are being compliant to the given tax laws from KRA, and you're also making profit. You're not evading paying tax. You are paying tax the right way, but you have employed or you have implemented strategies that will ensure that you're not paying higher taxes to KRA. We check on the key features of the tax planning. So number one is legality. We have said it is a legal procedure of minimizing the tax liability. So these strategies that you're going to use to reduce your tax liability, they are permitted by the tax laws. Those tax laws that are given and passed by the government, so you are complying with them as well as minimizing your tax liability. Then we have optimization. So the aim of the tax planning is to reduce the tax burden. So at the end of the year, you're not paying a higher tax, you are paying very minimal tax. And as well, you are maintaining or maximizing your tax profit, your after-tax profit. So once you pay the tax, the profit that you're going to remain in the business is still maximized. So that's what we refer by optimization. Then we have the forward looking. So you do this in advance. So when you talk about tax planning, those strategies that you're going to implement in your business, we are not talking about the past period. We are talking maybe in the next month, what are you going to do in the next accounting period? So it's within the coming tax period. So you're doing this in advance. So this is the decision that will help you to minimize the tax, and whatever you're going to do or the strategies that you're going to implement, it will influence the tax outcome that you're going to have. That liability at the end of the period will be affected by the tax planning that you're going to do. The other feature is compliance oriented. So as far as we are doing the planning to reduce the tax liability, we are ensuring that we are compliant. By compliance, we mean you are doing your returns on time, you are reporting accurately to avoid KRA penalties. So we know that KRA normally comes for their audit, and in case of any non-compliance, they are going to charge penalty to every business person or every taxpayer after their audit. So as far as we want to reduce this tax liability, we should have the compliance forecast, ensure that you have done accurate taxes and even accurate reporting. You have declared your revenue accurately. You have not under-declared the revenue. Also, the expenditures that you have claimed, you have enough support for that. And you have filed your returns on time. So each and every tax obligation that you have checked under the tax structure, they have different timelines within which you should file. So beyond the given timelines, there are penalties and even interest that KRA will impose to your business. So it's good to have a focus of compliance. As much as we want to minimize our tax liability legally, also check on the compliance so that when KRA will come to do an audit, you'll be on the safe side. We can also check on another aspect under the tax planning. So we are seeing that we are minimizing the tax liability legally. So we have different terms. We have the tax planning, we have tax avoidance, and the tax evasion. So we can check what they refer to and their difference. So for the tax planning, we have said it is permissible by the law and it is encouraged. The government will encourage you to do proper tax planning so that you can reduce your tax liability. So that one is very encouraged and advisable for you to do as a taxpayer. Then we have the tax avoidance. It's also legal for you to avoid paying tax. Implement those strategies that will help you to avoid paying tax. It's legal, but under the tax avoidance, we have some loopholes which can cause you as a taxpayer to have some issues with KRA. So the KRA or the Revenue Authority, they will challenge the tax avoidance, the strategies that you are using. So it's also good to ensure that these strategies that you are employing in your business, they are legal and they won't be having any tax implication in case of a KRA audit. Then we have a tax evasion. This is illegal. You shouldn't be evading to pay tax as a taxpayer. It's your responsibility or your duty to pay taxes. So by tax evasion, this is where as a taxpayer, you do illegal activities so that you cannot pay taxes to KRA. For example, you fail to declare your income. So at the end of the year, you have zero income. But during the KRA audits, or even if you check your accurate performance, you have a higher income. So you have failed to declare that income. So at the end of the day, you are evading to pay tax by doing that. Also declaring false income. You're using false records in the declaration of your returns in order to avoid paying tax. So that one is tax evasion and it is illegal and it is highly discouraged. You should not be evading paying tax as a taxpayer. So it's better you check on the strategies that will help you to minimize your tax by doing proper tax planning for your business. Now we move to check on the strategies that we can implement in our businesses so that we can reduce the tax liability. And these strategies are legal, they are permissible by the authority. So it's something which is right. When you do the tax planning or implement these strategies, it's the right thing to do as a taxpayer, so that you can minimize the tax liability at the end of the period. So number one, we have optimizing use of deductions and allowances. So when we talk about allowances and deduction, we have capital allowances, number one. So it's a form of tax incentive offered for any capital expenditure that you have, and it will help to reduce the tax liability. So as a taxpayer, you're supposed to claim the investment deduction, industrial building allowances, and the wear and tear allowances. So they are allowed. You have that capital expenditure. You have that building that is used for industrial purposes, for manufacturing. Ensure that you have declared the allowances or any investment deduction associated to that expenditure, capital expenditure. So by doing this, you're going to reduce the taxable income. So it's your responsibility as a taxpayer to ensure if you have that capital expenditure, you have utilized the deduction and allowances to reduce the tax payable. Failure to do that, the system won't reduce that, won't apply it automatically. It's the responsibility of the taxpayer to ensure that you have applied that. So if you fail or you omit to include the wear and tear allowances, the taxable income will still remain high and you'll end up in high taxes. So we can check on the wear and tear allowances. So we check the wear and tear allowances, we charge them on the capital expenditure, on machinery, equipment, and even computers. So we have different rates. We have 25% and 10% for the wear and tear. So for the wear and tear, it's a bit different. The rates are different from the depreciation. I believe we are all aware on the depreciation computation for the machinery and the equipment that we have in our businesses. So we have different four different classes of depreciation. We have class number one, it's 37.5%. Then we have 30%, 25%, and 12.5%. Those are the standard rates given by the authority. But now when it comes to KRA, the first two categories, that is 37.5% and the 30%, the VAT allowance is at a rate of 25%. Then those that are depreciated at a rate of 25 and 12.5, the VAT allowance is given at 10%. So it's good to ensure that you compute the VAT allowance, subject that to the given rate where they should be, and allow that as a deductible amount. So it will enable you to reduce the taxable income, thus low tax liability to pay at the end of the year. Then we have investment deduction. So as an investor, you have incurred capital expenditure on building or machinery used for manufacturing. So you are entitled to receive an investment deduction equal to 100% of the cost. So if you have that building or machinery for manufacture, make sure that you get the investment deduction and utilize that. We have industrial building deduction. This one is on building used as industrial building, and it is given at a rate of 10% of the cost. Then in case of any net of any investment deduction, you should net that and subject it to 10%. So we can see different deduction and allowances at given rates. So whichever you are, the capital expenditure that you have, make sure that you properly classify that so that you can utilize that allowance. We also have farm work deductions. Those ones, those taxpayers in the agriculture department. So any capital expenditure you incur in the construction of farm works, there is a deduction allowance of 100% of that cost. So make sure you get that deduction. So at the end of the year, if you have any investment that you have done or you have incurred under the construction of farm works, you are granted a deduction at a rate of 100% of the cost. So those are the deductions and the allowances. Number 2 strategy is efficient use of tax losses. So as a business, you're supposed to carry forward the tax losses so that you can offset the future profits that you have to reduce the taxable income. Maybe the previous year losses amount to 5 million, and this year you have a taxable income of 3. So once you utilize or you carry forward the losses, you're going to even to get another loss of 2 million to carry forward because you have used the 5 million to offset the current taxable income of 3 million. So it will enable you to reduce the tax. And this one is allowed by KRA. So make use of those tax losses that you have. We have another strategy that is the transfer pricing and related party transactions. So those of us in businesses that we have related party, so ensure that any transactions between the intercompany, we comply with the transfer pricing regulations that have been given by the authority. So we have the arm's length principle, so you can search that so that you can get the in-depth of what it entails. So ensure when dealing with the intercompany pricing policies, you are very compliant. We also have you should maintain a transfer pricing document. Maintain that document. Don't just say it verbally that this is the arrangement that we have between the intercompany. So ensure you have a valid documented transfer pricing document to support. KRA will also audit you that in your tax return, they can see that you have declared or you have disclosed the intercompany transactions. So at the end of the day, when they come to audit you as a company, they want to see that transfer pricing document that you have been following in your transaction. And also it should apply the arm's length principle. So you can research on the arm's length principle to see what it entails. So ensure that you have that document and you apply those principles highlighted to avoid any penalties from KRA during their audit. Also on the intercompany or the related party, we have different transactions happening, like management fee. You pay management fee to the group company. So at the end, KRA expects you to charge withholding on the management fees. As far as you're charging management fees on a normal transaction between you and another party, ensure that even for the intercompany, you charge withholding on the management fees. We also have royalties. So in case of any royalties, we have withholdings that should be applied and paid to KRA, and different rates are applied. If the intercompany or the intercompany, they are within they are locally, that is in Kenya, the rates are different from having another intercompany in a different country. So the rate will apply between a resident and non-resident, and also a resident and resident. So make sure that you understand the different transactions that you're having, and in case of any taxes that are subjected to those transactions, make sure you comply, deduct the taxes, and pay to KRA on time. We have the allowable deduction. You're supposed to claim any allowable deduction that you incur in your business operations. This one will reduce the taxable income. So you have business expenses. Ensure you deduct all allowable expenses in the business. You have salaries, you have rent, transport, all those expenses that you have for the business. Ensure that you deduct them. Any allowable expense should be deducted. And also to note, each and every expense that you claim is allowable, it should be having a support document. It should be having an invoice or a receipt to support it. So you have come and claimed that you have a salary and wages expense of 10 million in that accounting year, but you don't have any pay obligation. So that one is also another KRA audit. You get an audit from KRA when you claim that you have that salary and wages of 10 million, but you don't pay the pay taxes. So ensure that you have valid support for those expenses that you claim. In case of such scenario whereby you have salary and wages, ensure you have pay obligation. At that point whereby you are starting your operations, you have your employees, and also to note a director should be number one employee of the company. So ensure you register for the pay obligation, file on a monthly basis, and pay the taxes. So at the end of the year, when you come to claim an expenditure of 10 million, they can cross-check whatever you have in the pay obligation and validate that. And also in case of any mismatch between the two, the pay, salary and wages, and the salary and wages you have claimed at the end of the year, it is also another audit trigger and will incur penalties for that. So ensure you have aligned the salary and wages expenditure. Any other recurrence, ensure that you have a valid tax invoice to support the rent expense. Even if the transaction does not have an invoice, maybe like transport, you're just going from one town to another, you have paid a matatu. So ensure you raise a petty cash, and it should be approved by the relevant parties in the organization so that it can support or validate those claims that you claim at the end of the year when filing your company returns. The other one is on the interest on loans. It is an allowable deduction, but these are borrowing that you have the loan. It should be fully and exclusively for the business. So don't just take a loan from a facility under the name of your company or business, but you're going to use that loan for a different activity. So during KRA audits, they would want support for that. They want to see this loan that you have, because you have claimed that interest as an allowable expense. How was it spent? Was it for the business or for personal activities as a director? Because as a director or a business owner, you can take advantage of that and get a facility on the name of your business, but you spend that money for personal activities. So during an audit, that one is very crucial. You have to show how you spent that loan, so that interest can be allowable expense to reduce your taxable income. So if you have that loan, but you don't claim the interest as your expense, so it is a loss to you as a taxpayer. So as we're trying to minimize our taxes, ensure that all these allowable expenses that we have, we can utilize them by deducting so that we can reduce the taxable income, and they should be having support documents. Even for the loans, we need the loan statement from maybe you have gotten it from a bank. We need the loan statement to verify the interest that you have claimed for that year, whether it tallies with the charges from the bank. If you have a loan from a different party, not a facility, not a bank or a financing institution, maybe a supplier or maybe another company has given you a loan, ensure that you have loan agreements stating all those are the interest to charge on that loan, so that you can qualify it to allow that interest on that loan. So it should be fully supported. Have the loan agreements in place in the company. Not just say that you came into an agreement verbally between you and company B so that they can loan you. There were no interest charged, but at the end of your mind, you just come and use the market interest rate and you claim that is the expense that you have incurred on that loan. The other one, we have bad debts. So bad debts are allowable deduction, but there should be proof that you tried recovering this debt and it was not possible. Maintain a file showing all the engagement between you and the debtor to show that there were efforts to recover this debt and it was impossible. So ensure before you come and claim that bad debt as allowable deduction, it is fully supported, and also it should be, I think, 3 years old. So you shouldn't be just having a debt for last month and say that I tried recovering this debt and it was not possible to recover, so I expense it. So we have those conditions that should be met for that bad debt to be allowable. We have staff costs. So under allowable deductions include all those staff costs that you incur, but ensure under the staff costs you comply with the pay regulation, because for the staff cost we have the salaries And any other benefits that you have on top of the basic salary that you give your employees, it should be charged to the pay obligation. So the staff cost, it's an allowable deduction, but it's also another aspect that they focus on during their audit. So the staff cost, you should be having the salaries, the pension contribution, medical cover, and training costs, and then they are all allowable deduction. But also note, like for the training cost, we say that it should be subjected to withholding. It's a professional service that you have engaged. So ensure before you pay the trainer, if the cost surpasses 24,000 per month, it should be subjected to 5% withholding and pay that to KRA. Failure to that during the audit, they will see that training cost. You have 3 million training cost. There is no withholding that was done before you paid the trainers. So they will demand for that tax and they'll charge penalties and interest. We also have another strategy, that is the VAT planning. Under the VAT, those of us with the VAT obligation, we say that if you are dealing with vatable supplies and you have attained the threshold which is given, that is 5 million annually, you should register for the VAT and file on a monthly basis. It should be done by 20th of the following month. But we have strategies that we can implement in our businesses to reduce the VAT liability at the end of the month. So number one is to purchase supplies from VAT registered businesses so that you can be able to claim the input VAT against the output VAT. So I believe when doing our VAT, we have observed that once we try to use an invoice that you got from person who is not registered for the VAT, the system will automatically disqualify that transaction. So you cannot use it. So in order for you to reduce the tax liability, the VAT tax liability, ensure you purchase from VAT registered suppliers. Then we have VAT refunds. So claim for the VAT refunds. Those people in the exporting business and suppliers of the related goods or services, it's permissible for you to claim VAT refunds, but you should be having enough support for the claim to be validated by KRA. Ensure that you are compliant. You don't have any arrears. KRA will not grant you that VAT refund. They won't give you if you owe them money. First, you have to clear the debts that you owe KRA. So in case you are under that sector, the exporters, and even you have not registered for the VAT obligation, make sure that you register for the VAT obligation so that you can enjoy by claiming the VAT refunds. Then we have filing the monthly VAT on time to avoid penalties. I've said that VAT should be filed by 20th of the following month. So currently we have up to tomorrow to file the August VAT. And once you file it later than 20th, it's going to attract penalties and interest on any unpaid taxes. You can also claim input VAT on assets. So you have bought a motor vehicle, you have bought furniture, it's allowed for you to claim that VAT on that asset. So when filing the VAT, make sure that it is included. So even at the point of purchase of this asset, ensure that you have given your KRA PIN number so that the transaction can be transmitted via eTIMS and it will appear in your records. When you do the auto-population during the VAT filing, it will appear and it will go through. So this asset, it will assist in reducing the VAT liability for the month. Then we have early registration of VAT obligation, especially while constructing a commercial property. So during the tax structure, we checked on the rental income and we said that for the commercial property, you should be having the VAT obligation. So in case now you have started constructing that commercial property, register the VAT obligation as it now. So those materials that you're going to purchase from the supplier and they are vatable, you can claim them at that point. So you'll be having a VAT credit to carry forward. So at the point when this property is complete and you have tenants and you are declaring not the income, subjecting that to VAT, The credit that you have carried forward from the starting period will assist to offset the VAT. So that is a key point to note for those with commercial property. As you start the construction journey, ensure that you have claimed those input VAT on those materials that you are purchasing that are vatable. The other strategy is to manage withholding taxes. So we have explained on the withholding taxes. We have the professional fees, rent, management fees, contractual, commission. Ensure that you have withheld and paid to KRA within 5 days after the payment date. Because failure to withhold and remit to KRA during their audit, they'll demand the 5% if it's for the 5%. In case of a contractual, it's 3%. They'll demand for that tax and penalties on top of that. So it will be an additional cost for you as a taxpayer because initially, believe when transacting with this party, you paid the 100% to them, but you are supposed to deduct. So it will be an additional cost to you as a business. So to minimize these taxes, additional taxes, in this case, you're supposed to be compliant. Withhold that transaction before you pay the supplier and remit to KRA within 5 days after the payment date. The next is leverage on special tax regimes. So we have different tax regimes. Number one, we have the export processing zones, the EPZ. So those that have registered their companies under the export processing zones, there is a tax holiday of 10 years. So you won't pay tax, corporate tax for 10 years. So we refer to that as a 10-year corporate tax holiday. Then you also have exemption on the VAT and custom duty. So that one is a legal way to reduce your tax liability, and it will increase the profit for your business because that tax, maybe for the corporate tax, the 30%, it will be a profit to you. Then we have the special economic zone. So under the special economic zone, for the first 10 years, the corporate tax is charged at 10%. So you're saving 20% because for the normal one, the tax is at 30, the corporate tax, it is at 30%. But under the special economic zone, you're being charged 10% for the first 10 years. Then the next 10 years, you're going to be charged tax on 15%. So it will be an advantage to you. You're saving that tax. So it's good that if you're operating under these tax regimes, enjoy those benefits given by the authority. The next strategy, we have the cash flow and compliance management. So it's good as we also try to minimize tax, check on our cash flows, have cash flow projections, and review the cash flows that you have to see the cash inflows and the outflows, and it will enable you to do proper planning. So under this, we have tax installments. So as a taxpayer, KRA expects you to pay tax installments. You're supposed to pay quarterly installments by 20th of April, June, September, and December of the current accounting period. So we are in September 2025. You should have paid the installment tax for September. Then by December 20th, you pay the fourth installment tax. So at the end of the year, when you engage an auditor and they do the audit and you have their financials, so the tax outcome, the tax liability that you have, it will be offset by the tax installment that you have paid throughout the year. So basically for the tax installment, it's an advance tax that you pay to KRA, but you're going to consume or utilize that tax at the point where you file your returns. So KRA expects you as a taxpayer to estimate your company performance. So we base it by the previous year records. So for example, 2024, you had a profit of 2 million. So KRA expects in the year 2025, you're going to have 10% more of 2024. So you should subject that profit to 110%. You get the estimate of 2025 profit Then you subject it to 30%, which is the current tax rate, and you divide by 4. So that tax that you're going to get from that estimation, that is what you estimate to pay by the end of the year 2025. So you divide it by 4 installments and start paying by April, June, September, and December. So at the end of the year, when you have done your accounts and you have seen the actual performance, you can be in a position to see whether you need to pay more taxes or not, depending on the installment amount that you have paid. Then we have timely filing. So this one applies to every taxpayer and every tax obligation. Ensure that all those tax obligations that you have filed them on time and paid any liability on time to avoid any penalty and interest. For example, tomorrow is 20th. So failure to file and pay the VAT by 20th. On 21st, it will attract penalty and interest. So observe the given timelines for every obligation and be compliant. We also have a proper bookkeeping. Every business person, whether a business or a registered company, should maintain proper bookkeeping. Have an accounting software in place so that you can do daily recording of the financial transactions. Maintain the physical records to support all those transactions that you have, so that even during KRA audit, you have records to defend or support your deductions, and it will assist in minimizing any tax that will come up. In case you fail to support any expense that you have deducted, KRA will charge tax on that. So it's necessary to ensure that each and every deduction has proper records to support that. And this will apply even for the monthly VAT that we file. You have claimed that you have declared a sale of 10 million and claimed a purchase worth 9 million. The purchase will reduce your tax liability. But in case there is no support to show, there is no valid tax invoice to show that the support of that purchase, it will be disallowed and KRA will charge tax on that. So proper bookkeeping is very necessary for each and every taxpayer to support during KRA audit, and also for financial reporting to show how the company is performing and the financial position of the company at any given time, and it will assist the management to make proper decision and making for that business. We have employee benefit structuring as another tax planning strategy. So apart from the salaries that we pay our employee, the basic salaries, maybe we have other benefits. So we should explore those benefits that are tax-free or they have low taxes, so that at the end of the month, for the employee benefits, we subject that to pay as you earn. You can have minimal taxes to pay to KRA. Some of the benefits, we have the employer's contribution to a registered pension scheme. Ensure that any contribution you are doing it's towards a registered pension scheme. Have a medical cover provided through an approved insurer. So ensure that insurer that you have for that medical cover, they are approved. In case they are not, that one cannot be allowable. Low interest staff loans with allowable limits. So those loans that we give to our staff, in case you're giving that staff at a 0 interest rate, and outside that they are supposed to get that similar loan at maybe 15%. So this staff is getting a benefit. So ensure that these benefits, they are also taxed at a low interest, or some are even tax-free. So before you give any benefits to the employee, explore them and see the tax implication they have. We also have benefits in kind. So instead of paying the employee a higher salary, you can offer them non-cash benefits, maybe providing them with housing, transport, meals. These are non-cash benefits. They are subjected to pay-as-you-earn tax, but not at a full rate. So at the end of the day, they are going to reduce the taxable income. So the tax charge will be lower as compared to when you give, maybe your employee, you are paying them 50,000 per month. Then you want to do an increment of maybe 30,000 to get 80,000 per month. So once you do the pay on that for the cash, it will be a bit higher compared with this 30,000 addition. It was a benefit in kind. So the taxes will be a bit lower. So these are some of the planning that we need to explore in our businesses to reduce the tax liability. So basically, we were focusing on the business or companies, corporates. So we can check on individuals. What do we need to do as an individual to reduce the tax liability as well as being compliant and maximizing our profits? Number one, we have to optimize personal relief and deduction. So every resident taxpayer has a tax relief of 2,400 per month and 28,800 per year. So you are granted that relief to reduce your tax liability. So when doing the monthly pay as you earn, I said that the pay obligation, that's the responsibility of the employer. So when doing the monthly pay as you earn, ensure that you apply the personal relief to reduce the monthly pay as you earn to pay to KRA. So in case you don't include or apply the personal relief, the tax will be higher. And the system does not pick that automatically. It is your responsibility to ensure that you apply that relief when filing the returns. Then we have insurance relief. So for the premiums that you are paying on a monthly basis, you are granted an insurance relief of 15%. That is for the life, education, and health policies. And we have a maximum of 5,000 per month. So that contribution you are doing on a monthly basis, 15% is a relief. It will reduce your tax liability. So in case you have those premiums, disclose that when filing the pay as you earn obligation, and it will reduce your tax liability. We have the home ownership saving plan. So if you are doing contributions towards the home ownership, that is 8,000 per month or 96,000 per year, they are deductible if deposited with an approved institution. So to note these deductions, they need to be done with approved institutions. Failure to do that, it won't be deductible. So on a monthly basis, if you are doing the home ownership contributions, your income will be reduced by 8,000. The taxable income will be reduced by 8,000. And at the end of the year, it will be 96,000. That is per year. So ensure that if you have this contribution, disclose that to your employer so that when they are doing the pay obligation, it will assist to reduce your taxable income. And at the end, you're going to have a lower pay tax to pay. The other one is to leverage on retirement contributions. We have the NSSF contributions. They are deductible. Any amount you contribute for the NSSF contribution, be it Tier 1 or Tier 2, all that contribution is allowable and it is not charged tax. So it will reduce your monthly taxable income. So ensure you provide you contribute to the retirement contribution. We have registered pension scheme contributions up to 20,000 per month. So if your contribution contributing to a registered pension scheme, you have 20,000 per month, which is not subjected to pay as you earn tax. So at the end of the day, once these contributions have been factored in when doing the monthly pay taxes, it will reduce the taxable income, thus having low tax to pay. We also have taking a mortgage instead of a loan. So we have a mortgage relief on owner-occupied interest of 360 per month or per annum or 30,000 per month. So if you have a mortgage, interest is considered as allowable to a limit of 30,000 per month. So it will also be used to reduce your taxable income. Get disability relief. So as an employee, if you are disabled, ensure that you register with the disability body so that you can get an exemption. Any person with disability and is registered has a relief or is not taxed for any amount 0 to 150,000 per month. So if you're there, you have employees who are disabled, encourage them to register. So their salary is from 0 to 150,000. It's not taxable. It is exempt. If they are earning 200,000, only 50,000 will be taxable. So up to 150 is exempt and 1.8 per annum. So ensure that we encourage them to apply for under the disability body so that they can get that relief. The other one, we have managing rental income efficiency. So we have talked about rental income. We have talked about the residential rental income, whose tax rate is currently at 7.5. So ensure that you're doing the monthly rental income. It's 7.5 on a monthly basis, and limit that to KRA. Because failure to do that at the end of the year, when KRA will come to audit you, the income will be subjected to the normal tax rate, which will be higher compared to the monthly 7.5 that you could have provided to KRA. Then for the commercial properties, we said it's buttable, and at the end of the year, you need to declare that income and deduct all allowable expenses. You have repairs for that property. You took that property under loan, so the interest on loan, insurance, land rates, all those are allowable expenses, and they will assist to reduce the taxable income from that commercial property. Utilize capital gain tax planning. So I believe capital gain tax is not new to us. We are familiar with it. So for the capital gain tax, this is whereby you pay 15% on a sale of a property. So any gain that you get from the sale of a property, it is subjected to 15% and you pay to KRA as a transfer of that property. So we have some exemptions which are valid. So if you are selling a private residence that you have occupied for at least 3 years, so that one is exempted. You shouldn't pay CGT tax. Also, if you are transferring property to immediate family members, it is exempted. You are giving inheritance to your children or in that immediate family member, so it is exempted from paying CGT. So in case of those transactions that are CGT exempt, make sure that you utilize that section when paying when doing the transfer of property to avoid paying that CGT if they fall under the exemption. Another one under the CGT, borrow against property instead of selling. So you have a property and you need finances, so you have to sell that property. So at the end of the day, any gain you receive from the sale of that property, you're supposed to pay CGT, which we have said it is 15% currently. So to avoid paying that additional tax, the CGT, you can use that property as a collateral to get a loan so that you can meet your financial needs. Then we have optimizing business income. So as an individual, if you are self-registered or you have a side hustle anywhere, you should register for the turnover tax. We said turnover tax is 1.5% of your gross sale if your annual turnover is between 1 million to 25 million. So register for the turnover tax because it's a final tax. Once you pay the 1.5 on a monthly basis, at the end of the year, this income will not be subjected to another tax again. So it's an advantage to those people, the small business people, instead of registering for the VAT, because we said for the VAT, the threshold is 5 million, but the same income will be taxed at the end of the year under the corporate tax. But for the turnover tax, it's final on a monthly basis. Once you submit the 1.5 to KRA, at the end of the year, you won't declare that income. It won't be subjected to any other tax. Then we have staying compliant and filing your returns smartly. So by compliant, we say that you need to observe the tax deadlines, ensure you have filed your returns on time and you have paid them on time to CRA. Then filing smartly, file accurately. Not just think of a figure under your income and just feel 3 million as your income, but that's not the actual position. So filing smartly means that you do that accurately so that you can be on the safe side. During the KRA audit, they won't find you having underdeclared your revenue, because in case of any underdeclaration, they will subject that to the corporation tax. And in case you have the VAT obligation or the business is dealing with vatable goods, you'll be subjected both 16% for the VAT and 30% for the corporation tax. So those are the strategies that we need to explore when it comes to tax planning, both for businesses and individuals. So they will assist us to reduce our tax liability as well as maintaining our profitability. So we check on some of the common mistakes that we do as taxpayers, which will increase our tax liability. So number one, we have poor record keeping and documentation. So under the strategies, we have said that proper record keeping is key. So failure to have a proper record keeping and maintaining documentation for each and every financial transaction that you have, it will costly and it will lead to more taxes from KRA. So ensure that you have a proper record keeping on that software, accounting software. If you're doing accounting manually, that one is not okay. Ensure that you have onboarded an accounting software. There are several. And even at the end of this session, we're going to see a demonstration of a software that we have, an inbuilt software, My Accurate Books. So you're going to see how it will assist you in maintaining proper records for your businesses. Each and every financial transaction that you have, ensure that it has a valid documentation to support that. All invoices should be kept in place. And in case of paid cash vouchers, they should also be maintained. For the salaries and wages, maintain those wages scheduled. The payment vouchers, have them. I believe currently for the last 2 months, we have seen KRA audits. If we declared salaries in the previous year, you have salary expense, but you don't have pay obligation, you have received a letter from KRA. They want to verify that, and you have been requested to submit documentation to support your claim. So ensure you have done proper bookkeeping and you have documentation for each and every financial transaction. Number two, mixing personal and business finances. So we are business owners. So at the end of the day, you say whatever is for the business is also for the owner. So mixing those finances is a great mistake that we do, and it will cost you heavily. Avoid using your bank account for any transaction for the business. Don't mix them. Ensure your business has an independent bank account from whatever you are using. During KRA audit, they will demand for those bank statements. And any transactions that we see from the bank to a company bank to the director's bank, they would want even to see the director's bank statement. They will audit the same. So ensure that you have separated those finances. Also for the expenses, any expense that we incur personally is not part of the business. Don't claim that expense. It is not allowable. And because you may fail to support that, or you support with the invoice referring to Mary instead of ABC Limited, KRA, they are going to disallow that, leading to high taxes. So how do you avoid the mixing personal and business finances? You do that by opening a separate business bank account. So ensure your business has a separate bank account from yours. Pay yourself a form of salary or dividends with proper documentation. So we said the director is the number one employee of a company. Ensure at the end of the month you have a form of salary. not just say that you're doing withdrawals. We can see from the bank statement, from that bank account, the director has withdrawn 5 million. At the end of the day, KRA will consider that as the director's benefit, and they're going to subject that to 30%. They will consider that as a benefit, it was supposed to be charged pay-as-you-earn tax. And since it was not done that, they will charge you 30%. And on top of that, you're going to get penalties and interest. So ensure as a director, you have a form of salary from your business, and it is included in your monthly, in the monthly pay-as-you-earn returns. Then use business expense card instead of personal funds. But in case that your business is facing some cash flow issues, and you happen to fund or maybe pay a supplier, you need to document that. Maintain a director's account showing all those transactions that you have done on behalf of the business, or those transactions between the director and the business. Have that account, and it should be properly supported. Number 3 mistake is ignoring tax deadlines and compliance. So that one is a costly mistake. Once you don't pay on time or don't file on time, you'll be having a penalty to pay and interest. Misclassification of expenses and income. So you're not classifying your expenses correctly and even the income. So at the end of the day, during KRA audit, they will audit you. And in case they find misclassification, maybe you are engaging in different activities. You said that during when doing the KRA filing, we should account for each and every activity separately. If it's for the business, farming, rental, or any other, maybe you have received donation and grants, you need to account for each activity separately. So misclassification of those expenses and income will cost you, because at the end of the day, you won't be having an accurate financial report to do. The financial statements are not showing the actual financial performance and position of the company. So we have an example there. So a Kisumu-based logistic company classified a new delivery van purchase, which is a capital expense, as a repair expense. So under the repair and maintenance, there is 2 million, which was the acquisition cost of that delivery van. So at the end of the day, it will assist to reduce your profit and pay lower tax. But during the audit, this delivery van it's a capital expenditure. It should not be allowable to reduce the taxable income. So they will disallow that and charge you tax on the actual profit. So at the end of the day, you're going to pay more taxes than what you originally paid. So ensure that each and every expenditure is properly classified. Then we have inadequate cash flow management. So as a business, as most of us do that, you focus on profits, but you don't monitor the cash flow. You are not monitoring the cash inflows and the outflows. You just want to see the profit that has been reported at the end of the month. So you'll find yourself in liquidity issues. So it's good to have proper cash flow management. Prepare cash flow forecasts and review them on a monthly basis. Review the cash flow statement to understand the cash inflow and the cash outflows. Also maintain an emergency fund, at least 3 to 6 months of the expenses, so that in case of crisis currently and you have an emergency fund, you can be able to fund the expenditures for the business and the operation will run as usual. Then negotiate better payment terms with your supplier. This one will also ensure or assist you to have better cash inflows for the business. So that's all for the mistakes. So we have checked on the strategies and the common mistakes that we do, leading us to have higher tax liability. So we check briefly on the tax audit and the current tax audits that are happening, because once we fail to plan, to do proper tax planning, at the end of the day, KRA will come and audit us and find us having higher tax implications to pay. So, as I said, KRA currently they are having their audits. They want to do compliance check on the taxpayer to ensure that you have declared the right returns, you have done it accurately. In case of any mismatches between your income in the corporate returns and the VAT, they want to verify the returns that you are doing. So the tax laws, they empower KRA to review your tax return for accuracy and determine the taxes paid by each taxpayer. So after you have engaged your auditor to audit your returns, the next thing that happens after the auditor has audited, they have filed the returns, KRA will audit your tax returns to ensure that you are compliant. They want to review your tax return to ensure that you submitted accurately and you paid the tax correctly. So the tax audit may be done through returns review, comprehensive audit or investigation. So out of these reviews and the investigation, the outcome include additional assessment in case of any fraud and also prosecution of the offenders. So that it's very necessary even before you submit the return, understand and see, have I done them correctly? Because after the review, you'll get an additional assessment requiring you even to pay more taxes. So which you could have avoided if you had proper tax planning strategies in your business and the tax returns were done accurately. So in case of any review, under the tax rules, as a taxpayer, you are given appropriate time so that you can respond to any query to facilitate the completion of any audit. Maybe you have been given 14 days to provide documentation to KRA and they were insufficient to you. Communicate to them and request additional timelines so that you can be able to surface them with the required documentation. So the compliance check happening from KRA, they cover issues on individual income tax, corporate taxes, VAT, custom duty, excise, pay, withholding, or any other tax administered by KRA. So each and every obligation that you have, ensure that you're compliant because KRA will not avoid that. Even for the withholding taxes, you don't have the withholding taxes an obligation, but from the transactions that you engage with as a taxpayer, that's where you know that you are required to pay withholding taxes. So from those claims that we have made, they will review them and see you are supposed to pay a withholding tax on this transaction, but you have not paid. So they will do an audit and require taxes from you. We can check on the tax audit focus area currently. We have the sales versus eatings transmissions. So I believe some of us who have not filed their 2024 returns and you have eatings, you have received a letter from KRA showing you the sales as per the eatings, and they require you to file your returns and declare that revenue. Because from their eatings record, they can see that you had transactions, you want revenue for that period, but you have not submitted your returns. So currently that is happening. Persistent VAT credits. So for the past 3 years, you have been having VAT credits on a monthly basis. Your sales are lower than the purchases. So that is a trigger, and KRA will audit you. That's a focus currently. They want to verify, have you declared the right revenue? Because they assume being in this credit position for long, it's either you have under-declared your revenue, that's why the purchases are too high. Because they don't expect you to keep on purchasing, yet you're not making sales. Then we have variance between salaries in your books and what was declared under the PS1. So the salaries and wages expense, that are crucial part that you need to consider when doing your returns. Ensure that you have the pay obligation. And I said for the last 2 months, the taxpayers have been receiving letters from KRA saying that you claim you have salary and wages worth 2 million, but there's no declaration of the same under the pay obligation. And if you have not received that letter, and you don't have the payee obligation, wait for the letter is coming. So be prepared. Having the salary and wages expense, they expect every taxpayer to have a payee obligation. So under the sales versus eating, the keynote that we need to do as taxpayers. So the sales that we declare at the end of the month for the VAT, they should be made with the eatings data. Before you file the VAT returns, ensure you get the eatings report. See the sales that have been reported. And currently, because we are doing the auto-populated, we are using the auto-populator to do the VAT. We are finding that from the record that has been transmitted to KRA, you're having maybe a sale of 1 million, but the actual sale for your business is 10 million. Even the eatings report can show that you made 10 million. So, and also the eatings data is with KRA. At the end of the day, when you just rely on the auto-populated record to file your return, you're going to under-declare. Ensure that you verify the sales that are there under the eatings. Make sure that they are matching. Any variance will be subjected to VAT tax. Unreported invoices or under-declared sales are being flagged. So in case they find that you have not declared sales, that one is another issue, because they don't expect you to just be having purchases, but on the other side, there are no sales being made, and every month you are making more purchases. So that one is also another issue. Penalties for non-transmission or mismatch. So after their review, in case of any mismatch between the sales and the eatings record, they are going to charge you the VAT, the 16%, and also penalties for the same and interest. They'll demand for reconciliation schedules and ETR logs. And I believe even those of us who are on the special table, KRA will give you a reconciliation showing the record for the VAT declared, the eatings, and even the bank. They want to see a proper reconciliation of the different entities that will show you the revenue of a business. We have the actual sales from the sales system. You had 10 million. They want to see that reconciliation. The actual position is 10 million. The bank has bank money, 15 million. VAT you declared 12 million. Eatings has 15. That reconciliation showing the variances, and any variance reported will be subjected to VAT tax. Persistent VAT credits. So this one will trigger the KRA reviews. So, and mostly if you have ever received a KRA review because of the VAT, it's very clear, they indicate that in their letter that they want to review the VAT credits from a certain period to date. You are showing that you have continuous VAT credits. So they'll demand to see the records, the bank statements, the sales invoices, any document that they may find it fit to have that review to verify that that's the actual position of your company. They will request for that. So in case you are in that position, do proper planning for the VAT. Ensure that you are no longer declaring a VAT credit going forward. Ensure on a monthly basis you have a VAT payable to pay. So during this review, they'll demand proof of purchases and supplier compliance. Because, as Kenyans, once KRA will request for a purchase invoice from you, I'll tend a river load and provide a purchase invoice. But they'll go further to demand a proof of payment. They want to see that proof from your bank statement. You paid supplier ABC. So in case the current credit card refers their actual, that's the actual position of your company. It should be well supported and there are no any gaps. So in case that's the actual position, they are not going to charge you the penalties or any VAT payable. But you need to consider and do a proper review of your business to show what is causing this credits on every month. And then on the payroll mismatches, so KRA is comparing the salaries in financials versus the pay returns. Any underdeclared staff or unpaid pay will be subjected to penalty. So in case we have a variance between the salaries at the end of the month and the pay return salary, the variance will be subjected to tax. So ensure that it tallies. In case you have casual wages that you have not included in your pay returns, have proper documentation to show that the variance is for the casual wages. Maybe they were being engaged on demand basis, not on a daily basis in the company. Support that claim that you have. We also find that under the PS1, something else that they check are the benefits on the allowances. Allowances, the bonus, all those benefits subjected to a taxpayer or to an employee, they should be considered when doing the pay returns. We say the benefits in kind, they are subjected but at a lower rate. So ensure you provide, you record that when doing the pay returns. And during the payroll review, which is currently happening, they request to see even the staff contracts. You have claimed that you have a salary and wages of 2 million. You don't have the pay obligation. They want to see the staff contracts, the pay slip, the payroll ledgers, and they are going even ahead to request for the support for any housing benefit, because we are aware that we are paying the housing benefit taxes. So they expect these salary and wages that you claimed of 2 million. Did these employees pay, or were they deducted the housing levy? So KRA also demanding for the same. On the emerging issues, we have automation of tax return filing for salaried employees. I believe we have heard of this. So the salaried employees will no longer be doing the manual filing. So how does it work? You log into your iTax portal, enter the national ID number, income, and the pay details will auto-populate from your submission, from the employer submission. So I say the pay return is being done by the employer on a monthly basis. So at the end of the year, the employee is expected to file the yearly returns. And the record is based on whatever the employer has been submitting. So at this point with the automation, once you fill in you enter your national ID, the data will be auto-filled from whatever has been submitted from the pay returns. So what benefits do we have for this? No more manual entry from P9 form, because at the end of the year, we are supposed to file our returns using the P9, and failure to that as an individual, there is a penalty of 2,000. Failure to file the returns at the end of the year. So now we have a simplified way of doing the returns and to avoid paying those penalties. The process is faster, simpler, and more accurate. I believe even filing is also a challenge to some of us, and you end up filing figures that will lead you to a tax payable position, which you shouldn't be. So the automated procedure is more accurate. It also reduces errors and saves time. Then we have the ongoing tax audit. So apart from the current focus with KRA, we also have others which are ongoing from way back. We have the returns review. We have the VAA, the additional assessment audits, rental assessment. Those with the rental properties, you have not been submitting the monthly rental income in case of a residential property. KRA are assessing that, as they will demand tax for that unpaid period. Expenses assessment. So any expense that you have claimed, they are assessing that. They want to see it being fully supported by valid invoices and even paid cash vouchers. And even they'll demand for approval of payments. Then we have VAT credit. That one is still ongoing. Comparison between turnover in income tax return and VAT returns. So when filing the corporate tax at the end of the year, you are required to observe even guidelines. The returns under the VAT and the income tax, they should tally. Any mismatch in case of any under declaration will be subjected to tax. Then we have advance tax on commercial motor vehicles. You have motor vehicles and you're declaring the same at the end of the year under your balance sheet. But for the advance tax, which is a requirement tax to be paid for the commercial motor vehicles, you're not doing that. So KRA will still send a letter to you. They want the advance tax to be paid because from their record, they can see you have commercial motor vehicles. Import and export information. The export information is showing you that you have a higher income than whatever you have declared. So it will trigger an audit. And even for the import, those records in the export and the import, in case of any variance between the declarations that you have made and that you can say that portal, it will lead to KRA audit. Still on the rental audits, they refer to KPLC and water meter information. So they can see you have 10 meters. So they expect you have 10 units, for example, but that's not what you have been remitting. So they will audit you and demand more taxes depending on that record from KPLC and water. Then we have the nil failures and non-failures. So continuous failing nil return, it is also another trigger, and KRA are auditing the same to verify whether is that the correct position or performance of your company. By failing nil or non-failure, it implies that you don't have any revenue to declare. There are no expenses that were incurred. So they want to verify that. They will request for bank statement to see, did you have any income that you received in your bank statement, yet you have filed a nil return. Not having pay obligation, yet having salaries as an expense. I said that if you have employees as an employer, make sure that you have the pay obligation. And I said currently this is the review that is ongoing, and I believe most of us we have received that letter. By claiming salary and wages, yet we don't have any pay obligation. Then we have tax investigations on evasions. So basically, those are the ongoing tax audits. And that brings us to the end of our presentation today. But before we close, I said that we are going to have a brief demonstration of an accounting software. We have an inbuilt accounting software by LWK Africa. So you're going to get my colleague to demonstrate the same to you so that we can make a proper decision as a business owner to see the benefits of having a proper bookkeeping through the use of accounting software. So I can just take 5 minutes to conclude, then we get our next presenter to demonstrate the software. So we can check on different events that we have. So we have a taxation masterclass, which is upcoming. It will be between 10th to 21st November 2025, and charges will be 25,000 for the online. In case of we also have a physical training for the same taxation masterclass. It will be from 5th to 7th, and charges will be 40,000 from 7 a.m. to 5 p.m. at Swiss Renana Hotel. So for the online, it's from 7 p.m. and 9 p.m. Charges will be 25. The online one will be a 2 weeks training. So it's good that if you want to sharpen your skills when it comes to matter taxes and get with us on board, you're going to learn more on the tax structures in Kenya, the payroll and statutory deduction, VAT, iTax navigation, custom and compliance, the tax refund, tax audit, how to handle a tax audit, dispute and resolution strategies in case you have a dispute or a tax audit from KRA. So you're going to learn that and how to maneuver in case of any tax audits. So it will be a 2 weeks masterclass. We also have a corporate package. If you're there and you want to come maybe as a package to get a package for your employees, you can still engage us and apply on the same. And at the end of that training, we are going to get a certificate which will enable you to get CPD point for IcePack members. And I believe those who have been attending our masterclasses, you have been in a position to receive your CPD point from IcePack. So engage us. And also we are going to share a link. My colleague will share a link. In case you are interested with the taxation masterclass, kindly fill in the link in the chat box. Then we have another free training. This is a skill up mentorship program that we present to you. It's a free training on charcoal briquettes and fire gel making. It will take place on 27th September. That's the last Saturday of September this month, from 10 a.m. to 1 p.m. at Thika Road Technical College, that is Ndarugo, opposite PCA Church. So on your way to Wetaidie upon Ndarugo, that's where we do that. We offer this training on a monthly basis, the Skill Up Mentorship Program. It's a free training. You are not required to pay anything, just avail yourself and get additional skills that can enable you to set a business. Then on the services that we offer as LWK Africa, we have bookkeeping services. In case you would be interested to get our services on bookkeeping, you can reach out to us. So under the bookkeeping, we have the data entry, management report, monthly filing of returns, reconciliation, payrolls. So in case of any service under the bookkeeping, reach out to us. Then we have the internal audit. So I know most of us, we don't do internal audits. We just wait at the end of the year once we engage an external auditor to do external auditor, which is a requirement. But for the internal audit, you want to review your processes, the internal controls in place, you can reach out to us so that we can have an engagement on how you can onboard us for the internal audit exercise in your business. Then we have the tax services. This regards all the tax returns, tax health check. You want to know your tax health position. What are the tax implications that you have in case KRA comes to audit you? You can talk to us. Then we have the tax refund process, tax planning, representation at KRA office, KRA audit process, advisory on tax implication, and tax training. Even apart from the tax masterclass that I've talked about, in case you want an in-house training or anything that can be custom made for your business regarding any tax training, you can reach out to us. Then we have the tax health check. Currently, we have a special offer at 20,000. So you want to review your taxes. Before KRA will come to audit you, you need to know your tax position. In case they come today, what are the tax implications? So we have that offer which is ongoing. In case you want the same, the tax health check, talk to us and you're going to review your taxes. Then we have my accurate book. So this one will assist in the bookkeeping, proper bookkeeping in your business. So it's a software that we have developed as LWK, my accurate books. So we are going to have a brief demonstration to see how it works and make a proper decision to have proper bookkeeping in your business. We're going to maneuver the system and see how it will assist your business. So then we have our location and contact. If you want to contact LWK, we have our phone number there, 0728 897 429. Our email, info@lwkafrica.com, and our website, www.lwkafrica.com. Also, if you want to visit us physically, we are located in Nairobi, Westlands, along Westlands Roads, Gate 83. You are welcome, come and engage us, even if you want to do it physically. And that's bring the end of my presentation. So kindly we request you just be patient so that we can have a demonstration of my accurate book, which will be presented by my colleagues so that we can wind up. Thank you very much for the participation in today's class. And I believe the questions have been responded in the chat box by my colleague. But in case of more questions, you can kindly keep on asking. As we handle the bookkeeping part, the demonstration, we can as well respond to your questions in the chat box. Also, you are very free to call us, communicate to us via our office number in case you want any engagement or any question with us. It's very open. Thank you very much.
Hello, I hope you had a very good presentation from my colleague. So I will be able to take you through my Accurate Books. So my Accurate Books is a bookkeeping software. It enables you keep your books clean and also can be able to track about your daily sales and purchases, and also you can be able to have a records of all the activities you do in your business. So I'll be able to take you through Accurate Books and how it can help you manage, simplify your accounting work, and also how it can help you manage your business. So I don't know if some of you have been able to interact with my Accurate Books. I hope all of you can be able to see my screen. Maybe by a share of an emoji. Okay, that's okay. So I'll be able to take you through my Accurate Book. So this is the website for the My Accurate Book. So you can be able to log into your computers and also be able to create an account as we go by. So this is a My Accurate Book, a comprehensive accounting software for growing your business. So basically, it can be your POS can also be able to track your customer and also can be able to manage your inventory and also tiers payment integration to M-Pesa bank, and also can be able to have multi-user access in the system. You can be able to have even your accountants and also your salesperson using the same account but under different login credentials, and they can be able you can be able to delegate the task they can be able to do on the system. The other part is about it's a cloud-based solution, so you can always be able to log in from whenever you are with any device. So maybe I can be able to log into my account and I can be able to present to you about my Accurate Books. So currently, if you don't have an account, you can just create an account immediately right now as we go on. So all you need is you create your account, your name and your second name, then the name of the business, like for example, Zinjo Roofing Solution, then the business email, and also you can set up a password that you'll be able to log into your account with, and also the location that is in Kenya. And then you can have a specific location where you are, that is maybe Nairobi or Kisumu or Mombasa. Then you can be able to select the currency you want to use, or you can have both of them, and also verify your phone number, and also you can be able to input your business logo on the account so that anytime you invoice or issue a receipt to a client, has all your details. So currently I will just use my account. So I may log into my account. And also if you have a question, you can always be able to share on the chat box, and then I will be able to review. So anytime you log into your Accurate Books account, you'll be able to see this view. This is the dashboard. You can be able to see the particular sales of that particular month, or depending on the date range you have been able to select. And also you can be able to track your expenses, and also you can be able to see the particular purchases you have been able to make on that particular timeline you have been able to select. You can always change the timeline is depending on the data you would want to see on the dashboard. So you can also, on the far corner, you can be able to see your profits and loss, and also you can also be able to see your debtors list and the breakdown of the amount they owe you. And again, if you have branches, you can also be able to create all the branches, and you can always be able to switch from one branch to another and also get the particular data and also and reports for that particular branch on its own. That's a new improvement we have been able to make on the system, so that you don't have to log out to log into the other branch. You can always switch from one particular branch to the other branch and be able to review the sales and also the performance of that particular branch. So you can have as many branches as you are, depending on the package you have been able to select. So maybe I'll be able to dodge into the system. Maybe we can have an overview. So let me go to the branch which I have a lot of data for it. So currently it's the RWK branch. So what we have the dashboard, we have been able to go through the dashboard. The items is where you will be able to input your products. So you can be able to have all your products, either raw material products or a service. So if all the products will be able to appear here, and you can be able to manage the stocks. Again, the services again will be able to appear on. So the software is suited for both a product-based business and also a service industry. So adding a product is very easy. Just create the name of the product, also the category, that is a product, raw material, or a service. And then you can have a description of that particular product or a service, and also the price you charge. If it's a product, you can have the purchase price and the selling price, and also you can have the tax type you are in, that is the 16% VAT or the exempt, depending on the service or the product you are offering, or an VAT. So that's how you can be able to add items in the system. Again, on the sales part, you can be able to make a sale, you can be able to create a quotation, credit notes, and also you can be able to receive payment. This is the list of your debtors you have, so you can always be able to keep track of the money your customers owe you, and you can always collect them and prompt them to make the payments of those particular debts they owe you. And also, again, you can be able to issue credit notes for any particular receipts or invoice that had some issues with the customer. And also can be able to generate quotations and have them as invoices. And also you can be able to create an invoice from a quotation. So it is very easy. So just after the quotation is approved, you can just be able to create a invoice immediately, and you can be able to share it with a particular client. So maybe you can be able to view one of these invoice. On the invoice, you can be able to generate a delivery note and also the particular invoice. So for now, we shall just view this particular invoice. So this one is one of the invoices I've been able to generate from an quotation. So you can be able to see your business name, your logo, the particulars you've been able to sell to that particular customer, and also the payment, if they have been able to make a deposit or they have a balance, and also you can have what they can be able to make the payments. And also you can have the your terms and conditions. So every business has its own terms. You can be able to input the terms and condition that you want. So we can be able to go back. So you can also be able to keep track of all the invoices you have been able to issue and the receipts, and also if that particular invoice has been paid fully, partially, or it has not been paid any amount, for easy tracking, so that you may not lose track on particular payments. So the other part is about the purchases. The purchases, you can be able to input all the purchases you get from your suppliers. You can be able to create your purchase orders to send to your suppliers. Again, you can be able to record all the purchases you have been able to purchase from the market or from your suppliers. You can have all the purchases listed here, and also the supplier who made the supply, and also the status if the supplier has been paid or the supplier has not been paid. You can always have them, and also you can be able to issue a debit note in case the supplier supplied something with a defect. So you can be able to create a debit note for a particular item or for a particular supplier. Again, you can be able to have all your suppliers in the system, so you can be able to create them in the system. And so anytime you want to record a purchase from that particular supplier, it becomes very easy and very seamless. So you'll just be able to input the items you have been able to receive from that supplier, and then select the supplier and also the payment status. So the other part on the account is about the expenses. You can be able to keep track of all the expenses you incur in your business, and also you can have a description of all the expenses you incur. So and also if that particular expense has been paid or is still pending, so that you can for easy tracking, and also so that you can be able to see what you have not been able to pay for, if you have been able to pay all your expenses. So the other part is all the customers. You can also be able to input all your clientele on the system. That is your customers, either it's a personal customer or a business. For a personal customer, you just a moment. So for a personal customer, you just need their name, their phone number, and their email. And also, if they have an opening balance, you can always be able to indicate there. And if it's a business, you can be able to create them up their KRA PIN, phone number, contact person, billing address, and also the shipping address. And also, in case they have an opening balance, you can always indicate on that particular customer. So on the other part is the accounting part. We have been able to add an accounting part for mostly for the accountants, so that they can be able to generate reports for them. So you can be able to get the charts of account reports. You can be able to see your journal of entries. You can also be able to track down the asset management. So you can be able to input all the assets that particular company has, and also their aging, and also their depreciation. And also you can be able to have your general ledger. You can be able to get that report of your general ledger. So you can be, it does a lot of work for you. You don't have to do so much. The system can be able to do most of the work for you. So you can be able to get your general ledgers. Again, you can also be able to get your trial balances. So, and also the balance sheets for your accounts. So you can be able to see if the books are matching, and also you can be able to see your total amount. And the other part after the accounting part is the reports, where you can be able to see your inventory balances, and also your profits and loss reports, and also your debtors, creditors, and sales reports. When you click on the P&L report, you can be able to see the performance of the business. You can be able to see the operating expenses, and also you can be able to generate for you the net income, and also a summary of all the expenses you have been able to incur in that particular set date range. Again, you can be able to have your debtors report, so you can be able to see, and also their aging variable. So if it is between 0 to 30 days, you can be able to see more than that, 60 days, 90 days, and over 90 days. The same way for the creditors, again, you can be able to get that particular report. And also you can be able to get your sales report, and also keep track on all the sales that you have been able to make, and also the status of the payment of that particular invoice. The other part is on the user management. In the user management, you can be able to have different workers using the system, but under different login credentials. So you can be able to create them as users on their account, and also give them the roles they perform on the systems, if it's an admin, cashier, accountant, and also a salesperson. And also you can be able to limit on what they can be able to see on the system, and what work they can be able to perform in the system. And again, on the branches I told you about, you can be able to input the branches you currently have. Currently, I have 3 branches: the Nairobi branch, the Strathmore branch, and the RWK branch, which is my main branch. So from my main branch, I can be able to transfer stock to the other 2 branches. And again, I can be able to get a report from every particular branch, and each branch can be able to do a different it can be a different entity from the other one, and they can be able to perform their duties without interference from any other branch. So anytime you want a report for a particular branch, you just switch that particular branch and you can be able to get the data for that particular branch. And also you can be able to reconcile the books. So I don't know how many have managed to register their accounts on the Accurate books. And also if you have a question, you can keep them on the chat box. So let me see some of the questions that have been asked on the chat box. Anyone with a question can ask in the chat box, how much does it cost to install the software? To install the software, you don't have to install the software. You just go to your Google search engine, that is Google Firefox, and type My Accurate Books, and you can be able to register your business. And again, you can download the application on the Play Store called My Accurate Books, and you can be able to register your account. So the charges for the software, or you can have the 5,500 is for the standard package, and also the premium package is 9,000. So maybe I can share that page. You can to upgrade, can be able to see. So for a year is 5,500, and also for the gold package is 9,000, and also it has different features from each other. So maybe for the gold package, you can be able to have up to 8 branches, and also you can be able to have up to 20 users, and also you can be able to get advanced accounting suite. For the standard package, you can have up to 3 branches and 10 users, and can be able to do stock transfer, inventory reports. You can have all the reports, and also you can be able to create invoices, quotation, track your expenses, your inventory. Yes. The other question was about monthly charges is 500, but we want to do away the monthly package. So we'll have the quarterly package of 1,400 or 2,200 for the premium, and half a year and a year. So the website, maybe I share the website. Okay. Well, so for the person asking about the website, I've been able now to share it. It is www.myaccuratebook.com. So the other question was, and my accurate books has really been simplified, so it is easy to understand. And if you don't have that much accounting knowledge, you can be able to maneuver through it. So don't have a worry, and also you can leave your contacts, and I can be able to get back to you, and we can have a virtual demo for like 10 minutes, which is free of charge. I can take you through the system. I can help you set up your account and also set up the business account and start using it immediately. Possible. Yes, you can be able to use it in Ghana. So you could just create an account, and then you can have a communication. So if you have any other question, you can be able to ask. So it always fails when I request a code. Maybe you are using no. For a Ghana number, I don't know if you can be able. So for the Ghana number, I don't know. Maybe you can drop us a text on the WhatsApp, and then we can have a conversation about accessing in Ghana. For the e-teams, we are waiting for KRA approval. So maybe by the end of this month, we'll be able to have integrated with the e-teams. So don't worry. Yes, there is a packet for the freelancers, so you can be able to get in touch, and then you can be able to share a conversation about the freelancing, and now you can also be able to get to manage to help us get more clients, and also we'll have a package for you for the freelancing. So you can just fill in your contacts, and we can be able to get back to you and have a conversation about the freelancing. So I don't know if there is any other question. Yes, just yes, you can be able to do so. You can be able to fill in your restaurant information in the system, and you don't have to. Yes, for accountant, yes, you can be able to get all the reports, the accounting reports. So maybe just create an account, and you can be able to have all the accounting, advanced accounting suite for you. So just create an account, and then we can be able to have more discussion about the accounting part. So I believe there is no any other question which there's no question I've not been able to answer. So you can be able to create an account and also fill in our form, and we can be able to get back to you. Then maybe we can be able just fill in the form, then I can be able to get back to you about the M-Pesa and the bank integration. So I'll be able to reach out. Yes, it is suited to use by accountants, Rogers. No, if you have no referral code, just create the account without the referral code. That is okay. If you have no referral code, you can just create account without the referral code. So Rogers, just create an account without the referral code if you don't have a referral code. No, Duncan, there's no extra charges for the integration. So create the account, and we'll be able to get back to you. The system can accommodate as many clients as you have, and you can be able to use for bookkeeping. so you can have as many clients as possible. So Isa, reach out and first create the account so that I can be able to give you a call after this. For Omenda, you're asking about the number you are using to register is the one will appear when generating an invoice. Yes, it's the number that will appear, but you can create an account and then you can be able to change the number from the accounts to have the number that should appear on the invoices be there. So you can be able to change the number that should appear on the invoice. Yes, Simon, I would recommend you to use this account to manage your client accounts. So I believe this one will be the best, and you can be able to generate the reports at any time you want them. And also you can be able to manage the accounts very swiftly anytime you want. Simon, you can recommend to that client to this particular software. It will really help them. We have a lot of business that are using this software to manage their accounts and also to manage their business, and it has been working seamlessly. So recommend them, and we'll be able to help them set up their account and also to integrate it and start rolling. So, Simon, I can see you have given your phone number. Maybe I'll give you a call after this for more discussion. And also you can be able to fill on the form. I can be able to get the numbers and give you a call. The slides on the discussion today will be shared. So make sure you fill in the Google form which has been shared earlier. So I believe there is no other question. In case of any challenge creating an account, you can reach us through 011 6 333 011 6 333 It is already on the chat box. You can be able to copy the number from there. So I thank you all for your time. Maybe I'll be able to get back to some of you and be able to help them with the creation of the My Accurate Books account. Share the Google form again. So the Google form will be shared again here. So my colleague will share the Google form so that you can be able to register. So make sure you fill in the Google form, then you can be able to get back on any particular issue you may be having. So just click on the Google form, register, and we'll be able to get back in touch. And I thank you for your time and have a nice day.